Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora koutou and welcome. This is the 11th episode of Markets, Mystics and Mayhem. This week we're going to dabble into the data and we're going to look at the housing market. Given we're a bank or we represent a bank, many of our customers are involved in housing, even if they're small businesses and have loans linked to housing. It's an important topic. It's Kiwi's first and favourite asset market, and we're going to get into it. And we're also going to talk about our forecast. So let's kick it off. Housing market has been through very volatile few years. We came out of COVID. We had record low mortgage rates, 2%, which has never been seen before. Even in the 1950s, after a world war, our mortgage rates only got down to 3.5%. So to get to 2%, that's quite stimulatory. We saw this massive surge, 46% gain in 18 months. And then what happened?
And then we saw a big correction, down, 18%. And yeah, it's just been such a wild ride for the housing market. But since it sort of stabilized early last year, the housing market's been pretty blah. It's been pretty flat. House prices have been kind of just trading sideways for the last 18 months.
So pretty much in 18 months, house prices have gone nowhere.
Exactly. So we had this massive surge. The Reserve Bank and the government decided that they needed to get the housing market under control. We saw some rapid rate rises and, rates today are still very restrictive. So the housing market has corrected, like you said, and has gone sideways because interest rates, are restrictive.
Okay, but rates, as we know, are starting to come off and are going to keep heading lower. So hopefully we're going to start seeing some activity in the housing market and a bit of a pickup, right?
We hope. That's the idea. We're expecting the Reserve Bank to cut, I think, quite aggressively still from here. The cash rate's fallen from 5.5 to 4.75. It'll fall to 4.25, and then hopefully 3.75 in February, on a path back to 3 next year. That'll take mortgage rates from high 7s into the low 5s, high 4s. That should do enough, I think, to get some activity back in the market.
Yeah, and I guess we're seeing sort of tentative signs of this pickup in interest in the housing market because looking at the few indicators of the housing market, median days to sell is one we watch all the time. It's a good gauge of interest, and that has it's still sitting above the long-term average, which is about 39 days, 40 days. But it's kind of trending down, and that's your indicator that, houses and interest in the market is picking up.
So why days to sell? Why do we like that?
It just tells you how long, I guess, property is staying on the market. And if it's getting snapped up quickly, that's your market, heating up. And if it's taking longer for property to sell, that means that there's just no interest. So that has been the last, 18 months or so. Median number of days to sell has been high above pre-COVID average, but it's kind of trending down now.
And it's a pretty pure read, right? I mean, you can't get that wrong, whereas we're seeing activity picking up.
With listings coming up?
Yeah.
Yeah. See, that's what I was going to say is total listings is also picking up. And to me, I'm thinking, okay, is that because more people are just listing because they need to sell? Or is this people, getting excited about the housing market? How do we tell the difference?
Yeah, well, I think it's a bit of both. So historically, you would look at the number of listings, and if they're rising, you think, oh, that's because they're not selling. Whereas now I think it's a bit of both. There's definitely stock out there that's not selling. But I think more investors are dipping their toe in the market, having seen activity and confidence pick up a little bit, rate cuts. I think we're seeing more property coming to the market just as confidence rises. They might be able to sell it now. investors who may not have wanted to sell over the last couple of years because prices are falling, and now, testing the market, and it's real.
Yeah, that's the time that we see sort of, it's a good, what do we call it, litmus test of the housing market is the spring period, because no one wants to go to an open home during winter. No one wants to put up their house during winter. So all this activity really happens in the spring period. And this is kind of what we're seeing. We were kind of expecting to be a bit stronger than where it is now. But I think that just tells you how much of a driver interest rates are, and they're still restrictive.
Yeah, exactly. And I think it will take time to see this. We need rate cuts. We need confidence to lift. We need property to come to market. I mean, one of the anecdotes I've heard is that the available stock of houses on the market has been pretty low. Like low quality stock has come to the market, probably because, it's been a weak market. You don't want to put your good stuff on. But that's slowly changing. We're starting to see some sort of higher end and nicer quality property coming onto the market. And again, that'll be, a good litmus test for housing.
And speaking of sort of anecdotes, we did actually go to a Kiwibank sort of mortgage advisor event last week. I heard quite a few anecdotes. The main one being that investors are definitely picking up inquiries. So not quite yet actually seeing that activity come through, but definitely the phones are ringing and definitely picking up there. MJ, did you hear anything?
I'm hearing the same thing, where activity is still quite weak, but that interest is picking up. It's gaining a bit more momentum. Interest rate cuts are helping. There have been some changes around investor property tax. So that's all kind of helping lower the hurdle, I suppose, for investors to come back into the market. So these little anecdotes, and they always come ahead of data. And if this is what we're hearing now, next year should be that year where, house prices appreciate.
And I think I need to pause the podcast right here and just say that maybe if you're someone who's my age and you're hearing us say investors are coming back into the housing market, you might be like, oh gosh, no, right? But I think that really brings out a point that we need to bring up, is that the problem with our housing market and housing affordability doesn't actually depend on the demand side and the investors. It's actually all to do with housing supply, right?
Yeah, absolutely. We love to focus on demand because it's quite visible, right? You hear of this migration boom. You hear of investors coming into the market. You hear of all these demand side points, but we don't talk enough about supply. And the problem with the New Zealand housing market has been supply for a long time. We've had quite a rapid rise in population. We haven't kept up the infrastructure spending across the economy. That's suffocating, I think, productivity, but also we haven't kept up the number of homes that we need. We simply haven't supplied enough homes. I think if you were to dream up a magic bullet or a sort of a magic response, it would be 100,000 homes priced between 500 and 700,000. That would really, help the market and I think make it a lot more affordable. We can't seem to do that. We've got plenty of excuses. We don't have to invent anything. We just have to put money to work and use this modern technology of prefabricated modular type housing.
Yeah, you don't have to look far to see that there are solutions to this chronic housing shortage that we have. I mean, the reason why house prices appreciated 45% during that COVID period, I think, is more reflective of the housing shortage that we have, rather than, yes, interest rates were really low and that stimulated the market. But I think that rapid rise really comes down to the supply side being just so, lacking in that area.
Yeah, I think you're right.
So basically, house prices are more sustainable now, but they're still not affordable. And the way we tackle that affordability is by housing supply, which I think we do have kind of a good-ish example of that in New Zealand. And I think that would be Christchurch, right?
Yeah, the whole rebuild you've seen, it really was economics 101. When you supply the market with more, housing, that did dampen house price growth. So they actually have been the better performing, I guess, less volatile housing market in New Zealand, they had a peak to trough decline of about 8%, which compares to the 18% nationally. And then from the trough to now, they're up sort of 5%, so a much faster recovery there. They just have a much better supply-demand dynamic in Christchurch. And on the affordability issue, what I heard when I was down there a few weeks ago was that lots of people are kind of looking into the Christchurch market because it is more affordable. You're comparing a $700,000 home in Christchurch to a $1 million home in Auckland. So you're seeing a lot of investors actually tapping into the Christchurch market.
Better stock because it's relatively new, cheaper, and a higher yield when you look at the rent that you're getting in Christchurch. So no wonder investors, look at the Auckland housing market and go, you know what, I'm not getting enough yield on that really expensive property, but I go to Christchurch and bang, I'd invest there rather than Auckland. So you can kind of understand it, right? And it's frustrating for, I think, people in Auckland knowing that houses are so unaffordable compared to incomes here relative to places like Christchurch. It's a frustration.
Yeah, so you're seeing this kind of people are looking outside of their regions in search for property, whether that's to live in or to invest.
Yeah. So speaking of the regions, how are the major cities going? I mean, how does Auckland compare to Wellington compared to Christchurch? We've talked about Christchurch. What about the two big cities?
Well, Auckland and Wellington are in the doldrums, unfortunately. I mean, I guess Wellington is still really suffering from public sector job losses and as well as sort of a shortage there too. Same here as Auckland. But what really surprises me is the activity that we're seeing in Southland. I did not expect Southland to be the sort of outperforming region in New Zealand for housing. So maybe we should touch what's going on there.
Yeah, Southland's housing market's been less volatile as well. They've seen this residential building boom, which is like Christchurch, like Canterbury. It's kind of helped the housing market. We are seeing the sort of North Island, South Island divide, where a lot of the more volatile house prices have been in the North Island and haven't been very well, with Auckland and Wellington down. But the better performing regions have been down south.
So Southland's been going through a little bit of a boom, or at least compared to other cities, which is cool. But then you look at Otago and other regions in the South Island, and they're just more upbeat than the North Island. I mean, Queenstown is its own little bee's own little world, but they've recovered with tourism recovering, and South Island just looked better than the North.
Yeah. I mean, Queenstown is interesting because I remember going down there and talking about this correction in house prices, and they were like, what correction? There's nothing. House prices only go up here. So tourism is obviously helping, but even during the pandemic, when house prices were kind of stabilizing, they didn't quite see the same drop there.
Yeah, and I've always thought of Queenstown as being quite an international market, right? You've got people from around the world wanting, loving to own a place down there.
They must have a pretty good rental yield down there, right?
They do. Yeah, they do. Because you can, depends on how you rent it, but full time has definitely gone up a lot because there's been a massive shortage of property in Queenstown and Wanaka and other areas. There's a lot of workers going down there and unable to find rental property. So there's quite a shortage in Queenstown. And then if you rent it out to tourists, well, you can get, quite insane overnight numbers during sort of summer and the peak seasons. So it really is quite an interesting market, particularly when you compare it to the North Island, right? So Rotorua and those other tourist hotspots are not bouncing back as much. What else do we need to talk about? We've talked about rates falling, which is good. We haven't talked about some of the other constraints on investors being lifted, which I think is quite important.
But aren't we doing that in a different episode?
Yeah, we are.
You're talking like a recording, but
I think he is recording.
Well, then we just say, okay, we do need to talk about the other handbrakes that have been applied and actually taken off. So there was an interest deductibility threat, removing that, putting it back on, and then the bright line test going out to 10 years, dropping to 2. That doesn't affect investors anymore, watering down of triple CFA. All of this regulatory stuff, which you said needs a whole other episode. So we'll stop talking about it right there, and we'll do
it next week.
Thank you. There you go. Done. So that's it for episode 11. We really hope you enjoyed listening to us prattle on about the housing market and what we think is important. From our point of view, things are headed in the right direction. And I think we forgot to mention our forecast, which is that house prices will rise by about 5 to 7% next year. We do think everything's falling into place for house prices to start rising next year, which will be beneficial to many Kiwi. In our next episode, we'll speak a little bit more about the restraints that have been applied to investors in particular, but we'll also talk about commercial property, which is also a pretty cool topic and some interesting stuff happening there. So thanks for joining us. Thanks for listening in. Please like us, follow us, jump on YouTube, Spotify, wherever you get your good podcasts, and please join us again. Thank you.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.